Hello folks, I'm L.A. Little and this is your weekly NeoTA wrap. Where we take a look at these markets, we do it from a neoclassical perspective each time, asking ourselves what happened last week. What does it tell us about the coming ones? I do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little, and if you haven't subscribed, you might want to consider it. Easy way to keep up with what's going on, very easy to do, no obligations, just click on the subscribe button, top right hand side of your screen. As far as what did happen last week, it was a down week. We had more pressure, just as we've had over the last 5-6 weeks. Down on the year across the board now. NASDAQ's the one that's been trying to hold it up, but last week, biotech started taking it on the chin finally. And that's been a huge gainer in that space, and that's starting to push down now on the NASDAQ. We also saw S&P 500, the Russell, pushing 6-7% losses on the year, joining the Dow 8.5% down on its own. So you've got some widespread pressure, shall we say, on these markets, and it is continuing. If we scan the boards, on the trend, we can see that all across the board bearish on this intermediate term time frame. And if we look back at the short term time frame, bearish across the board on the indexes themselves, right? And then also if we look at the short term time frame here on the sectors, right? Most of these continue to be bearish. A few of them have turned sideways, but for the most part, you've got kind of a temporary lull and a bearish move on those indexes and those sectors. If we pull up the S&P 500, we'll start with a daily chart. And what you're seeing now on the S&P 500 is you're seeing that run higher now being sold back down. We never did quite get to that retest regenerate zone that was up above. And that move back down now has broken another swing point low. That's this transition you see here. And it's going after the next one. And then below that, you only have the August lows left. One of the things I was pointing out to subscribers today is that you kind of have a range trade setting up here. And that range, it's coming down to test those lows at this particular point in time. And that's going to be the real test tomorrow, the rest of the week, is do you get under those? Because if you do, there's really nothing left but this support zone you see right down here at the bottom. If you want to get optimistic, I guess you could think that you can move back up here, do a retest regen there, get over the swing point high. So in other words, make another run to the top side, but I don't know. That looks a little far-fetched right now. I think the real question is, how does it perform when it tries to find new sellers at lower and lower prices? If we pull over the weekly chart and take a look at it, I've pointed this out before, and that is that this big bar down, that's this bar, right? That tends to hold price for some period of time, and that is exactly what is taking place. In other words, when you get a big spike down, big volume escalation, typically, especially when it's a wide price one like this, where you have, some hammer type action, big lows way down below, right? You'll test the top, and if you can't stay above that top, you're going to drift back down. You're going to hold into this range, and that typically is what happens, and that is what is happening here. This bar is holding price. It's not allowing it to escape. And then if you look at it on a shorter term basis, we just looked at on the daily chart, you've kind of got this little range inside the larger range. You can see the support zones down here at the lows, and then you can also see them off this prior low. That is where support exists, and that's where the buyers should step up if they're going to step up at this particular point in time. If you pull it over and you look at the monthly chart, right? On the monthly chart, you still got the swing point lows. They still haven't been tested. You did have a lot of volume on that low from October last year. And if you look at the lows in August, right? Even though there was volume, the volume wasn't as high as what you had in the prior spill. So the real question is going to be is if you get under these lows, so in other words, you undercut the August lows, you still got to deal with the October lows of last year, and then even beyond that, there's another set of lows out there from the summer of that year. Those are going to be, or should be, right? This area should be a fairly significant support zone if we push down into that area. So that on a long-term basis is what we're looking at. Now, if we focus our attention for a moment on the back here on the general trends, I sometimes say, in a bullish market that you'll have, bullish trends on your long term and on your intermediate term, and then on your short term you'll get some sort of a momentary, lapse where it kind of, pulls back and then comes back and joins. Well, you do have mixed picture on the long term versus the intermediate term, but this is almost like a momentary lapse here where you're getting a little bit of short-term strength against the bearishness that exists on the intermediate term time frame. So in other words, even though the longer term and the intermediate term is this way, this had done that and then had pushed, then had turned around and pushed back up, and that's what's happening right now. The expectation is that it will turn around and join the intermediate term time frame and try to work lower again. So the momentary strength is something that potentially should get and is getting sold to some extent. If we turn our attention to the NASDAQ, on the NASDAQ, this has been the strongest index. And so that big spill down was immediately bought. An ABCD type structure was put into place. And this thing tried to go back up and break over the bearish retest and regen. But in fact, it failed to do so. And as a result, as it got to those highs, the sellers did show back up, make themselves known, and began to sell it again. And then as part of that, if we look over at the sectors, you're starting to see some of the strongest sectors give it up. And I'm talking about the IBB in particular. We had big volume expansion on Friday. We had Clinton talking about it on Monday. That got the spill going 3 days more down, and then Friday they started to really give it up, got some volume. So now you're deep into the August low. You're about halfway into it. More than likely, given the way this is trading, it is going to seek this low, right? And that's going to be the point where, sellers are either going to have to decide that they want to sell at lower and lower prices, or, that's enough for now. If we look at the longer term time frames, and here's the weekly, you can see the same sort of action taking place here, but I want to pull it back to the monthly. What you see on a monthly time frame is there's plenty of profits in this sector, right? Going back to the August lows of 2011, other than this one spill that took place here, this has pretty much been a March higher on a basis of $100 up to $400. So this thing fourfold increase on the way up over 4 years. So you're averaging a double, well, not every year, but you're averaging, what is that, 300, actually it's 400% on the way up from these lows, right? And so you've got a huge set of gains here. In other words, this could come all the way back to here, and you still would have significant gains on a longer term basis. And the point is that as a market matures, as sellers do start to sell, those high-flying sectors, the ones that are strongest that nobody wants to give up, are the ones that have the largest volatility when things start to give up, and they're an indication a lot of times of when the latter part of the selling is starting to take place. You saw it back here, you're seeing it again up here. I would think as this expands, volume expands, gets up into this type of expansion, maybe it's going to be into this zone. that's where you're probably going to see some sort of a buyer enthusiasm. Maybe they start coming back out and buying it versus sellers willing to sell at lower and lower prices. So, when I look at this market and I look at these sectors that are so strong and have been so strong starting to sell off, I know that finally the selling has gotten the attention of most players, not just a few. What we should recognize that it's not just that set of high flyers. We've had high flyers elsewhere. For example, the SOX. SOX sells off, gets a nice little bounce, and now selling off again. You got a high volume low here that tested those October lows of last year. You tested it on more volume. That's a prime setup to come down and test again. And so my point of bringing this up, and we'll look at the monthly as well, is that you've had some significant gains in other sectors that haven't been taken back either. In other words, over the last 4 years, you've seen significant gains in many, many sectors. In this case, it's 3 years of it. You've gone from a price point of about 48 on the SOXX all the way up to about 98. So you did about 100+ %. You did a double. Now you're getting the selling, you're getting the pressure, the volume escalation. These kinds of setups where you have volume escalation typically do find a way to work back lower. And if we think about lower, you've got a retest regen back here on this time frame, right? And we're on the monthly time frame. That would bring it all the way back, right, to the majority of these gains that have taken place. And I could certainly look at this sector and make a case that if these swing point lows break, that we're going to see that price push right back in here and do the retest regen. And recognize it would be the second time, so it's not going to be an automatic buy as a result of that pushback. And also recognize that if we start to see some of these sectors on the longer term time frame start breaking on the monthlies, right, then that sets up the case where we could start saying, hey, this long bull run finally has come to an end. So we're not there, but we're getting closer. That closeness is something for us to continue to monitor. And if we look at some of the weakest sectors, and I'm going to go to the XLB and pop straight into the monthly, you can already see this one has transitioned to bearish now on a monthly basis. It's the first one to do that, and so we have the bearish transition here as it breaks another swing point low. And if we look on the energy sector, right, this is another one that's been under pressure for some time. That one had turned bearish some time back, and so you have two of the major sectors bearish. You've got others that are coming close enough to start thinking about breaking them. And what I typically tell you is that when you have 2 to 3 of the major sectors break down, usually the rest of them are going to follow. So we're getting to that point on a long-term time frame where we can start to think about the possibility that the bull market maybe really is over. And if we turn our attention to overseas, one of the things that we're seeing overseas is that, the bearishness that we're seeing here in the U.S. markets really is happening elsewhere too. Here's a swing point low that was broken. This is on the Aussie. This brought the Aussie back in to do another retest regen on this prior swing point high. It had actually broken for one bar before and then took back off again. But as it comes back in here, this is kind of the congestion area that you would think you'd see some sort of an attempt to hold price. And as it comes back into there, that's one to watch along with the rest. But if I just kind of flip through these, you can certainly see the difference between them. Like here's India, still fairly strong overall. You had a nice big spike up. These bars in here would be an ideal place to do some buying if it wants to come back in farther. And if we just keep going down the road here, the Bovespa, and we're on the monthly chart now. This is sitting at lows, multi-year lows. We saw Australia, transitioning to sideways. We see India still pretty strong. If we go over to Europe, we can see Europe coming back in. Now, Europe had actually had a breakout. This is a bullish breakout that took place on this particular bar. And I'll point it out here so that we're talking about the same thing. This bar, you can see the transition trend right there. That's the breakout. Goes up, lasts more than 6 bars. You got 1, 2, 3, 4, 5, more than 6. Then you test back into it. That should be a fairly automatic buy. Gets a bounce. Now it's still in that area, still testing. If this comes down, and if we look, to say, okay, where's our swing point lows? If this comes down all the way to here, it would break a swing point low. That's probably not likely. So the trend on Europe probably is going to stay to the upside for some period of time. That's even in a little bit better situation than the U.S. And it's kind of what you would expect with what you have with the QE taking place in Europe, and probably going to be extended in Europe if need be. Draghi has made that fairly clear. If you go back and look, right, you had the pullback in October, then a nice big spike up. And again, you had breakouts. In this case, it didn't actually set a swing point high, but you had nice big thrust up, and now it's coming back in to test them all. That's the strongest of the world markets overall, right, and along with the U.S. And if we keep going down the list, I just want to show some of these. If we look at any of the resources, here's the Toronto market, the Canada market. You can see breaking trend transitions already. If we look at Hong Kong, trend transitions have already taken place here as well. Sideways, trying to break again. If we look at Shanghai, this one has also pushed considerably lower from those spike highs that it had, and it's testing into the breakout area from the previous breakout back here. So all in all, we keep seeing pressure in most countries. Can it continue? Sure it can. It can until it doesn't, right? And that's the thing about the markets is just because they've pressed lower doesn't mean they can quit, that they necessarily will bounce, just as if they press higher doesn't mean they'll necessarily pull back. Things can extend. They can extend a lot farther than you expect, and they can extend both ways with respect to that. Lastly, I'll take one quick look at one more, which is Taipei. Taipei, if you remember, if you look at it on a daily chart, this thing had a nice big run up. But when you look at it on a monthly chart, it looks very different. Bearish trend. This thing comes down heavy, gets a bounce basically, right? And now is trying to push lower again. So when I look at the world markets, I don't see markets that are supporting some sort of a turn yet. When I look at the U.S. markets, I don't see it there either. Matter of fact, I see those things that have held up finally starting to come down. The IBB being the most recent example, but it's even broader than that. Part of that is a result of the fact that the IBB, of course, bleeds over into the healthcare sector. Healthcare had been one of the few sectors holding up. Matter of fact, if we look at those sectors real quick, here's the healthcare sector, and I'm going to bring over the weekly chart. Let me grab that one because there is probably the better view on these. Here's the weekly chart. You can see how healthcare now starting to come down. And remember, on those August lows, that Monday madness, you had huge spike downs on these ETFs. So to get under these lows is going to be very hard. But to test them certainly is possible, right? Because those tests are really back into these October lows. So you can imagine, a situation where these come back and test back in to this area. So, don't be surprised if you see pressure in a sector like this, right, where that pressure gets applied and continues to get applied, and maybe it doesn't break, but it certainly can come back down and test into these lower areas. Healthcare, and I'm going to pick out the strongest for healthcare, consumer discretionary, which is helped tremendously by the oil collapse, consumer durables, which also is helped by the oil collapse, but also it's helped as a result of the fact that we have dividend payouts there, so people tend to run to those. And the other one that had held up really well was the financials, but the financials and the healthcare are starting to break down. And so when I look at these sectors and I think about the overall trend here, if you start seeing these last couple sectors give it up, financials, durables, consumer discretionary, then this market really is going to be set for some sort of a tumble. Okay? Well, I think that's it for tonight. It's going to be a busy week. We got a lot of data out this week. You got Fed speak every day. As a matter of fact, you got 5 Fed speakers on Friday, which is like insane. So we're going to get a lot of choppiness as a result of that. You've already got the trend attempting to push to the downside. And so we bring back in the daily chart and kind of wrap this up, and ask ourselves on a shorter term basis, what is this market doing? What's it trying to do? If I pull up the S&P 500, it looks to me like this market is going to at least try to test this range and see if it can break it. If it can break it, it's going to test the lows. And there is a high volume low here that hasn't been tested. And so to me, that's the real test. It's going to probably happen this week, and we're going to see whether or not it can break it down and get to the lows or not. Now, at this particular point in time, I think it's going to be hard to break these lows out. Matter of fact, I think more than likely, if it does get that low, it probably sets up a pretty nice range trade on a very big basis, right, into that area. And then if you divide that up, into equidistant type areas, I can envision certainly I can envision kind of a middle line here in that area there, or you could even draw it, to where you have quadrants, one up here and another one maybe down here, and then those are not exactly drawn in correctly, but if I draw them in something like that, right, you kind of got 3 quadrants. So really you can see this is a test to get into the lower quadrant. It's a test on this range that we saw as well. If we draw that back in, right, it's a test on this particular range, and it's a potential ABCD down on a big time frame basis, weekly time frame. But I suspect that probably just isn't going to fire at this particular point in time. Folks, thanks for joining me. Have yourself a great one. It's going to be a busy week. I'll see you and help you through. Take care. Until next time. Good night.